The CNBC ticker is sponsored by EFG International.
Elsewhere, an executive board member of UBS has been charged with tax evasion in the United States. Rael Weil, the chairman and chief executive of the bank's Global Wealth Management Unit, is accused of helping 20,000 American customers hide $20 billion worth of assets from tax officials. Mr. Weil has given up his role at the bank until the situation is resolved. If convicted, he faces 5 years in prison and a $250,000 fine. Well, join us to discuss the industry and where it goes next is Kamil Stender, the chief executive of Helvetia Wealth. Kamil, thank you very much indeed for joining us today. So let's start off with this intriguing UBS story. When does it become stepping over the line when one minute you're helping your clients to have efficient tax regimes, the other minute you're helping them to avoid tax, full stop, i.e. you're breaching the legalities? It's a very fine line, isn't it?
Absolutely, it's a very fine line, and obviously UBS have deemed to have overstepped the mark on this occasion. You know, they manage tens of billions of assets for US-based clients, and what is clear is as long as you are promoting good tax citizenship and taxes are being paid, then obviously you will not have these troubles in the future. The US government have made a very clear statement here today by indicting such a top-line official of UBS, and this will have far-reaching effects in the market. I mean, I know UBS earlier this year stopped their entire US private client desk in Switzerland, laid off about 75 private bankers in doing so. So it will have some resounding effects throughout the industry.
President-elect Obama has talked about his desire to rid the US system of these havens. We've seen similar moves talking about Liechtenstein, Andorra, the Isle of Man on this side of the Atlantic. How practical is it that these havens are going to get closed down or even limited in terms of what they can offer to Western individuals?
Yeah, I mean, you're absolutely right in a lot of ways, Steve. I mean, increasingly offshore tax havens are coming under a huge amount of pressure and disclosure of the assets they hold for onshore citizens. Liechtenstein, we obviously saw earlier in the year, there was a big scandal with some of their private client data being sold off to some of the secret service agencies around the world, and some really big names were seen as evading tax. This really does bring back into the scene this whole argument of offshore versus onshore wealth management, and I think the players which will be best suited for the environment going forward will be those that can offer really more of an onshore wealth management service.
Martin.
I mean, that kind of leads me to the question about the attraction of new capital. We saw quite a bit of outflows from the two big names in Switzerland in the previous quarters. Do you expect that to continue as it links to reputational risk, or do you think it'll start to get clawed back?
Yeah, absolutely. I mean, UBS have traditionally been the 800-pound gorilla in our market space. So for us smaller guys, more niche players in Switzerland, it is a welcome sight to see perhaps the schoolyard bully finally get a black eye, you might say. I mean, UBS, they've had net outflows last 2 quarters of around 70 billion in assets. When you compare that to the fact that over the last 8 years they've actually never had any net outflows, it really is a surprising change. So I think the banks and industry professionals that will most benefit are those that obviously haven't got the big subprime write-down issues, and we'll see some big inflows.
Camille, let's talk about your business. What have you got under management? 500 million Swiss francs. Where are you allocating it?
At the moment, I have to say, and this is perhaps a case of more luck than judgment, but we chose strategically to come out of all pure equity plays about 18 months ago. So any equity positions we have for clients is based purely in structured products. So there is a 100% capital guarantee underwriting that. So our client portfolios are holding up pretty well through the course of this year, and that's of course helped us to attract more money.
And you've got flat asset flows at the moment, haven't you? I mean, you're not seeing any money coming out.
Yeah, I'd have to say, with the market outlook where it is, organic growth is pretty sluggish. So we've chosen as a business, strategically, our best form of growth right now is by way of acquisition.
And very briefly, the new funds you're talking about, equities and timber.
Yeah. I mean, we've got a long-short equity fund which we're bringing to the market now. I mean, we think perhaps now over the next 12 to 18 months is a good opportunity to slowly start looking at more equity positions, just with valuations at such ridiculously low values. But also a timber fund. I mean, at the end of the day, trees will always grow, and you know, zero correlation to equity markets, and you know, very, 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 very good.
Look, I'd like to expand upon this. You'll join us again, either in Zurich or when you're next back in London. It's nice to see you.
Okay.
Thanks very much indeed. Kamil Stender, the Chief Executive of Helvetia Wealth. Right, worldwide exchanges coming up next. The anchor, from a London point of view, is Ross Westgate.
Yeah, just...